Anand Tandon also joins us on the show, and let's begin the discussion with these defense names itself. It's a very tricky setup that you have. You don't feel like selling these stocks because they continue to do well. You also have FOMO on one hand because for a person who's missed out on this rally, there's no way to catch up. What should one do? Just stay away, give up on that FOMO, or even now perhaps participate a bit?
Well, fresh money buys, I don't think certainly are warranted. If you're holding on to it, you can obviously continue for some time till you begin to see a crack in the market or in these particular stocks. Uh, how do you play defense? You don't play defense in India. You go buy outside. Most of the companies globally will be far cheaper than what you can buy in India.
Okay, makes sense. Of course, the valuations have run up just so much that it would be a little foolish to step in right now. But Idea, Anand, I don't know if you've been tracking, not just Idea, in fact, Bharti as well has had a phenomenal move.
Move is predicated on the fact that you have to assume that there will be an increase in ARPU. In other words, all of us will be ending up paying significantly higher than we have for our cell phones. Most of the crack happened because of Jio coming in and fighting for market share. That is now history, right? Today, Jio has the market share it requires, and therefore, with a three-player market, I'm assuming BSNL doesn't do much. You obviously want It's almost they are kind of creating a situation where they will be raising prices for themselves, and therefore being able to make more profits. Among that, even then, Idea, I think, remains the weakest player. They have a lot of catch up to do, both in terms of their investments in technology and even to retain their own their own subscription base currently, because I think they have the weakest product line. So the best way to pay it would continue to be Bharti. Jio has too many other. Reliance is what you will need to buy, and that has obviously got many other triggers, but it's not a pure play kind of thing.
Taken, but there is that opportunity which is clearly visible in the telecom names. Let me actually bring on board what Mark Mobius had to say on the matter as well, because he did point out that while they have been looking at Airtel, Vodafone Idea is also a name which they've added to the list of their portfolio. Listen into a slice of that conversation.
I think the telecom sector is looking very interesting. Vodafone Idea is particularly interesting. We're looking at that as well.
Did I hear you say Vodafone Idea, Mark?
And also, I was mentioning Vodafone looks interesting. And in the power sector, by the way, I also wanted to mention that the power sector is particularly interesting. Such stocks as Ratan India, that kind of stock are going to be very interesting going forward.
Ratan India in your portfolio, I can also see there is Vari Renewables. This stock is done exceedingly well. Any reason why you've added Ratan India and Vari Renewable in your portfolio?
It's all about growth. At the end of the day, stocks like this are going to benefit from the overall growth in the economy.
Right. And much like defense, where else do you feel that it's time to now tread with caution?
The whole market. There's almost nothing in the market that looks cheap by valuation standards, and even by momentum standards. I think much of the market has had a fairly serious momentum. So the companies that have not done well are possibly the only places that one could be looking at. And there are no great news there. But despite that, things like private sector banks, which have grossly underperformed, and perhaps some of the other names that are not doing as well could be looked at. But that's really pushing it. Other than private sector banks, which are very medium to long term, I think will do reasonably well from here also. The challenge remains that most of the companies that you are not doing well are for a very good reason. And when you start trying to buy just because the stocks are relatively cheap, you are basically making a compromise in terms of the earnings quality and the growth potential. Given where the market is, I don't think this is the time necessarily to be doing bottom fishing.
Time to do bottom fishing, because then you're clearly compromising on the quality and the fundamentals. But if you're buying something for growth, that seems to be priced in already. Numbers for Manappuram Financials up for you on the screen. It looks like a good set just by the first look, because the profitability has come in at 563 crores versus 415 crore last year, and the NII too has shot up by a substantial 32%. We had of course got the number of Asirvad, which is a subsidiary of Manappuram, earlier in the day, and that too were impressive. So these are the latest numbers coming in from Manappuram. The stock is pretty much sideways, not reacting in a big way to the earnings as yet. But Ashok Leyland was the stock which was reacting to its earnings. The margins were a sizable beat versus expectation, but then the flip-flop happened on account of the overall changes that were made to the leadership team. The earlier CFO has been elevated to the director of M&A and finance, while there's a new person who's coming in at the CFO position. But on the charts, Kunal, what would be your view on Manappuram as well as Ashok Leyland?
So Manappuram could be interesting as a contra bet from current levels of 179. The stock so far has not shown any major signs of trend, but the risk reward at current levels could be a bit more better for Manappuram. And we've seen historically that the stock generally becomes a very good buy at support points rather than on breakout points, because on breakouts the stock generally loses momentum immediately post the breakout for itself. So I think this could be a good risk reward play for Manappuram at current levels. Ashok Leyland also, I think, post results, when you look at the charts over the last few days and the breakout about that 175, 185 mark, which was a huge resistance for Ashok Leyland. I think post that the stock has gone through a very strong uptrend, breaking past about 200 mark. So I believe now that this 200 level could be a very strong support for the stock. I think at current levels of 212, we could be looking out for targets of at least 225 to 230 for Ashok Leyland.
Okay, that's the take coming in on some of the buzzers there. Still going strong for both L&T as well as HDFC Bank. They're still pretty much in pole position on the index as we speak right now. Bharti as well is catching up. BPCL, Axis Bank are all holding out well. ITC, Tata Consumer, it's the consumption leg which is taking a bit of a breather today. You could add even Titan to that list. So they are stocks which are not doing all that well. But Anand, you think a contra call in the market could be IT, or rather, are you getting conviction for IT at all, or is it still an avoid?
I don't think there is any significant conviction on IT. There is, it will still remain a fairly weak performance that you will see from most companies in terms of volume growth. And consequently, I don't think that you are looking at anything much more than maximum or double-digit growth in the bottom line at best for most of the companies. In that kind of scenario, buying companies which are trading fairly expensive, both relative to their historical valuation profile as well as given their context, given their growth prospects currently, I think it remains a challenge why you should be buying anything big. Now, given that you would have to have some allocation if you are running a portfolio, so I would imagine that you would pick up one or two names and keep it there. But by and large, the general purpose IT services business is, I think, not looking very rosy right now.
But the biggest talking point, of course, in the markets right now is election and how the markets will be behaving around that. We had culled out the data as to how the market behaves maybe, 1 month prior, 1 week prior versus 1 week later. And more often than not, that we have seen that ahead of the, elections, the market actually rallies. And post that, at least over the last 2-3 times, actually 2 out of the 5 times, we had seen that the markets had corrected, while just in 2019 and 2014, when NDA had come back to power, both the times we had seen that ahead of the elections was also a big rally, and 5 days after the election too, it was followed up by a big rally. 2014, you can call it a bit of a surprise, but 2019 again, it was factored in that the NDA government is coming back, and despite that, there was almost a 7-8% move in the markets ahead as well as after the election. What do you think will happen this time around, Anand? Because we're already running, 2.5% for this week itself, and we've rallied almost 1,000 points from the bottom. There's 1 week still to go ahead of that election. But post that, let's say on June 6th, 7th, do you think it'll start being all about profit booking, all about, a sideways move for a long time?
So let's look at 2 extreme cases, right? Currently, the market assumes that the current dispensation will continue. Assume it does. What is the new earnings that is going to come through, or what is the new reason why the stock should rally? I can't find any. Globally too, the US market is beginning to show signs of significant weakness. And if we were to follow anything that's come from that market, again, there would be some amount of pressure that may build up in India as well. The only thing that is currently driving the market, perhaps, for the largest part, has been the retail, and now for the last couple of days, maybe the institutional players from overseas, which could be simply a reallocation of money because money has to move out of the US. So those kind of drivers are more important right now than the local election. Take the other case, take the worst case extreme. You have a change in government. Certainly, a certain amount of uncertainty and consequently volatility can be fully expected. But the volatility is unlikely to be on the upper side. So either way, the way I look at it is post-election, the upside has no great triggers. Downside, one scenario at least shows that there is a potential for a significant downside move. Otherwise, it will be more the impact of the overall global markets that will affect. So clearly, to my mind, going into the market, one needs to be a little cautious, either reduce positions or take buy protection.
Right, okay. That really is the take coming in on how is it that one should be positioning ourselves ahead of the big election day. But, we've been catching a lot of voices as well and, speaking to them as to what is this big June 4th day really going to mean for the markets. Are we already seeing a pre-election run-up? Is it going to be then a sell-on news? And how is it that you should be positioning your portfolio? In fact, here are a couple of market voices highlighting the same, if we can just play that soundbite now.
My worry is more on the global market. Less India is already factored up to that extent. Its fall is happening. Maybe it can correct further. I'm not going to rule out. But the best way to play this market is through sector rotation, stock rotation. You do get such opportunity. Closer to the event, we have raised significant amount of cash level, which we have never done in the past. So we have a good amount of cash. If there is a market fall, we'll be buying opportunity.
The continuity of the current government and current policy doesn't seem to be still. The continuity looks to be an extremely high priority event, like 95, 97% types, or maybe even 99%. Good monsoon and good continuity of the political setup and the capex boom continuing, tax collection being good, I think we are in good for, again, next 12 months, and after that we'll see. Most of the people in the market, they should also get reconciled to 10-15% correction. And once that is there, you're reconciled to that and you buy the good stuff, high ROE, high growth at reasonable PE, you do well.
Yes, today it is fair to say that the market believes that there will be continuity. So, if something goes wrong with that hypothesis, will you get a deep correction? I think you will, right? But we've seen historically that if the underlying stocks that you own have fundamentals, they have earnings behind it, they have cash flows behind it, value will come back.
Okay, so that's the view coming in as far as market mood is concerned. But let me toss it to say Rudramurthy as well, because the Adani group of stocks have seen quite a bit of rebound of late. What within that pack looks the strongest to you?
Rudra, the Adani ports looks very, very strong. And if you look at Adani Enterprises first, it has now given that close and breakout above 3350. So once this move above 3350 sustains on a closing basis, yes, further legs to this long consolidation of about 6 to 7 months will end and stock will be headed up. And for me, above 3350 close, which is most likely today, stock is headed towards 3500, and that will be my top pick available in F&O also. And if you see even charts of Adani Port, again similar patterns, but it is just awaiting that close above levels of around 1425, 1430. So let it close above 1430, then I will have a buy on Adani Port, but most likely to give that breakout above 1430 on a closing basis. So yes, my top two picks from Adani Group will be Adani Enterprise 1 and then Adani Port.
Taken. So that's the view coming in as far as some of these Adani group of stocks are concerned. Adani Ports definitely looking strong right now. But in terms of the big movers, Aegis Logistics has actually gained further ground now, 15% higher. Yes, the earnings were good and Street has taken its time to digest of all of that. So it's not that there was a sudden move post earnings. It's a very calibrated move that we are seeing. Of course, the company is looking at expanding its presence in both the eastern as well as the western coast, and that is something which will augur well for the company's earnings going forward as well. In terms of the other big buzzers, well, from the frontline index, HDFC Bank is one which is doing the maximum heavy lifting for now. L&T is up 1%, Bharti Airtel, Axis Bank as well as NTPC. TCS is down and out. ITC too, after its earnings, is not seeing any amount of run up, and Reliance is pretty much sideways. But let me ask you about the auto pack as well, Anand, because it seems like there is a bit of peaking out there as well. The interest seems to have dwindled a bit. Would you concur with the view or not really?
Well, I don't see the excitement in auto at all. Clearly, the numbers are still somewhat weak, except for the very high-end segment. So the only growth, for example, in passenger vehicles that we're really seeing is happening in the high-end SUVs. That's not a very large market in my view, and it's not something that can sustain very high levels of growth for a long period of time. You have to get back to the middle segment, which is where the bulk of the market is. And we aren't seeing that growing. Now, even if you take the two-wheelers, which has seen a resurgence of interest, we are just barely at the level we were 5 years ago, and the valuations are perhaps 3 times as much. So are you going to be able to sustain that kind of growth rate that we have seen just because you're coming out of a low base? I'm not so sure. Tractors, again, the story is similar. So there are hardly any segments in the market other than what we've been talking about for a long time, which is that the higher end of the market where the income has not been affected by inflation or by any adverse economic movement around the world is the only part where the consumption remains strong. We have to wait for a broader level of consumption to come through before looking at company things like auto, where perhaps a more sustainable position can be done. The technological challenges are also quite high. Right now, you are looking at EV and a lot of other challenges which still have to play their way through the system. We don't know how India will compete across many of the newer players. I mean, every day you have a new manufacturer coming in. China has just released a new manufacturer who had nothing to do with auto, having delivered a vehicle which is already sold 10,000 at a fairly interesting price. So I think the technology as well as the market challenges are very high in auto. The current valuations don't justify.
Rudra, what is your take on the likes of M&M as well as Maruti? I mean, they've had a fair share of run-up, but do you think there's further headroom to these names on the charts?
Yes, for me, large cap will definitely perform well, and these are stocks which are just waiting a breakout. So if you see specifically on Maruti, the close on Maruti above levels of around 13,075 confirms that yes, the consolidation is done and stock can further move up. And if you look at charts of Mahindra and Mahindra, yes, again, this stock having made that big move already from levels of the breakout level was around 1975 2000 zone. From there we have seen a non-stop rally towards 2500 plus, and now again any consolidation and any move towards 2550, I will be a buyer. Even at current market price, I will be a buyer. So definitely stock looks very strong. Both Maruti and M&M will do well. And I feel because FIIs have now started buying, large caps will do very, very well from current level. Stocks like HDFC Bank, Reliance from current level still have a lot of space to go. Another 1 week time closer to that exit poll, still this parabolic move will continue. So short-term traders stay long and stay with large caps for another 1 week. Then let us take a call at that point of time.
Take a look at PNC Infratech right now. I think that stock has shot up. Let's pull up the intraday chart and see what's happening, because that stock has been doing quite well as it is for the week. Let's pull up the 5-day chart, because there was that order win that the company was the lowest bidder for. So there was a midweek reaction to that, and this week itself that stock is up a solid 34%. Let's pull up HG Infrastructure as well and see whether it's managed to mirror the move or not. Even Ashoka Buildcon, because the commentary for FY25 guidance has been very strong. Anand, what do you make of these smaller, infrastructure companies? Because of late they had gone out of flavor because Street was not willing to back on those balance sheets which were a bit leveraged. But clearly there seems to be some sort of interest coming back on the likes of NCC, PNC Infrastructure, KNR Constructions of the world, etc.
Most of them are very robust order books. The challenge with the infrastructure company is always that the margins are somewhat low. I mean, you operate at 4-5% net margin. And that's the kind, when you're doing a contractual job, that's the kind of retention that the contractor actually wants to keep, the contract giver. So effectively, you have no cash flow. Your cash gets sucked up, and as your order book, as your size increases, your working capital increases, and if there is any delay in payments, you get into a trouble. Currently, the situation is such that it is loaded in favor of the construction companies. Orders are more, companies with the capability to deliver are fewer. Therefore, the margins have somewhat increased, and to that extent, the growth rate, the growth path remains fairly robust. So, if you can find companies which are not particularly expensive relative to the fact that their order books will cause them to deliver a growth of maybe over the next 3 to 4 years, most of them will double their size. You could be looking at a place where you could hide for some near-term thing. However, that said, if you are looking at the large cap, you have very few options, and you pretty much have to hang in there.
Just hang in there, at least when it comes to the large caps. That's the word coming in from Anand Tandon. Anand, we'll let you go on that note.
If you like this video, then like, share and subscribe to ET Now.